Good afternoon. This is Dale Snyder with the Snyder Group at Keller Williams Realty here in Las Vegas, Nevada. Today's video is to be informative. It's a little lengthy here, so this is designed specifically for people that I've already spoken with. Maybe I'm sending you this link via email. Maybe a friend has forwarded you on this link. And it's to explain the short sale process as a whole. So we're going to go ahead and assume that you've already decided that you're most likely going to do a short sale. So now it comes down to doing your due diligence and research on the front end. I've got another video that's called the 5 critical questions to ask your realtor before you short sale your property. That you can find on my website as well. So all of this information is found at dalesnyder.net/short sale. Right here is the link. So the first step is to gather information and interview. So we've specialized in short sales for years, and we've found the most fundamental thing on the front end that needs to be done is, one, have an in-depth interview with you and consult you and advise you of the process. 2, have a conversation with an attorney just to look at what the potential legal ramifications are. You know, obviously as a team that specializes in short sales, we've got an attorney to refer to you at no cost. And then also have a conversation with the CPA, because there could be some tax implications. So we'll also have you set up to do an interview with the CPA. So once you've done all of that research on the front end and you feel comfortable with our services, then we can move on to the next step. The next step is going to be listing your home. Listing the home, and let me back up, the first step is going to be gathering what we call the short sale package or paperwork. You can find this at dalesnyder.net/short sales. Go down to the document checklist and you'll see the documents that are required. Quick summary, last 2 years tax returns, last 2 months checking and savings, W-2s, financial worksheet, hardship letter of explanation. And what the bank is going to do is, see, they're going to take your hardship letter of explanation, they're going to compare it to your tax returns, and they're going to compare that to your monthly checking and savings to make sure everything's meshing. I mean, they've got to put the painting, if you will, together of why you're trying to short sale your property. Maybe you're an investor and you don't have a hardship in the sense that we lost our job and we're not able to make our payments, but maybe it's just slowly bleeding you to death. You're negative $500–700 a month. That's a hardship in itself. And we've been able to get short sales approved while people are current on their mortgage. So if you're getting a relocation or you have an adjustable arm coming due, that is a hardship in itself as well. So don't think that you have to have lost your job and just be in financial dire straits to do the short sale. So then we list your home, which is pretty standard. We do the listing agreement. Myself or one of my representatives will go out to your property, take photos, room measurements, and get it put in the MLS for sale. Then we'll arrange showings, the property's shown, we get an offer, and then we move into the negotiation process. The most important thing for you to understand, excuse me, is that you have to sign off on the purchase agreement. And in that purchase agreement, when we're referencing seller, we're referencing the senior lien holder or the person that you pay your mortgage payment to. So when they're asking for little items to be paid by the seller, that's the bank that's being asked to do that. Critical thing. That's come up a lot. My clients are like, I can't pay for all this, or I'm not willing to pay for it. You're not being asked to. So you would execute that contract, and then my short sale division will begin the short sale processing of the file. Within the first 30 days, we should have an appraisal done on the property and a negotiator assigned to the property, or within the next 30 days have a negotiator. That's if everything's running smoothly. The average short sale takes about 2 to 6 months to get an approval letter. So this varies drastically. And a lot of it depends on the seller and the buyer and how quickly they can provide documentation to us. I think that's it on the negotiation. It's just you have to execute the contract, then we submit it to the bank, and then you just wait, basically, and let us do our job. And we'll update you once a week, once a month, of where we're at with things. Then we go to the closing the sale. This is where we've gotten the official short sale approval letter in writing from the lien holder. In that letter, they're either going to say they're giving you a release of the liability of the difference, or they're not. And that's where we may begin negotiations, and you may have to come to the table with some cash, depending on if you're a primary occupant, if this is an investor loan, if you've got a second mortgage that's a HELOC or equity line of credit. Some of our clients have a third mortgage, which is a pool loan. That's where you may have to come in with a little bit of cash, but maybe not. That's a conversation for you and I to have on the phone in this initial gathering of information. I will pace you on this so you're not blindsided when you get down to the end. Once we have the approval in writing, you will sign off on that in acknowledgement that you agree. The buyer will also have to sign off on this, acknowledging the agreement to proceed. Once that document's executed, we now begin the sale. So from the time we list the home until we have the written approval, we're just in limbo. The buyer's not really committed, you're not committed. But once we have that approval in writing, we've got a normal deal and the due diligence will begin. Meaning, the buyer's going to come in and do a home inspection. If you're in an HOA, we're going to have to order HOA documents. And we're going to have to get payoff demands from the HOA so the title company can prepare the closing statement so the bank knows exactly what they're going to get from the sale. If the buyer is getting a loan, they're going to have to get their appraisal done at that point. And yes, if the appraisal comes in lower, we go back to the bank and renegotiate a lower price. So that's where it becomes a normal sale, something that you're probably more familiar with. It's this cloud of from listing home till we get the approval in writing from the bank that's kind of that gray area that the consumers usually don't understand. Important to know, when we get to the closing, you have to go to the title company and sign the closing documents. Because keep in mind, you still own this property. And without your cooperation and agreement in writing, the bank cannot short sale the property. I hope this information is valuable to you. We do have a lot of other videos out there that are informative to help you out to understand this process. So whether or not you just found us, searching on Google, or if I've directly said go to our website to watch this video, you can find more videos if you go to Dale Snyder 1 in YouTube to get to our YouTube channel. And then once again at dalesnyder.net/short sales. We have frequently asked questions. We have resources, because there's a HAFA program, there's the HAMP program, there's the Humana program. There's about 10 of them out there, so you may or may not qualify for those. This is Dale Snyder with the Snyder Group at Keller Williams discussing the short sale process from the seller's standpoint. I hope this was valuable information. We look forward to the opportunity to represent and help you get through this process. Have a great day.